So look, I mean, the first thing that you do, is that Warren Buffett, he says, rule number one is don't lose money. You look at we were talking about concentration of risk. Okay. So we have concentration of risk in terms of things like the stablecoin market and, well, not the stablecoin market, but the bond market, of which stablecoins are now an accelerator to the front end of the curve. So you have a concentration of capital in short-term securities in US debt markets. So the first step, as I was saying, is to not lose money. So this is where you do not want to be invested. And it's sadly where most people are invested. If you buy a mutual fund, and this is even true if you're sitting in Melbourne, Australia, or Queensland, or in Auckland, or anywhere of these other places that your listeners are, many instances they're invested into global markets or into the large equity markets, which is the United States. And in that space, you have, so about 71%, the US accounts for roughly 71% of global market capitalization, share of global market capitalization. Okay. At the same time, it accounts for 25% of global GDP. So that's completely out of kilter. At the same time, US stock valuations are at record highs, 75-year highs, 76 years now. Okay, so concentration of capital on a global basis, US. Highest valuations in 75 years. Now, if you drill down into the US equity market, what exactly does that look like? Of the S&P 500, there's the Mag 7, right, which has just been screaming higher. The remaining stocks in the S&P 500, there's like 493 of them, have basically gone nowhere, right? So while the S&P has been going up, it's only being carried by these 7 companies, right? Further concentration within those 7 companies is NVIDIA, which is like 4.7 trillion valuation. Okay. So you talk about concentration risk. If NVIDIA tops out and falls over, and by the way, it's trading at a PE of over 55, 56, something I haven't looked today. It's probably up more. Okay. These are extremely high valuations. And so you have this huge concentration of risk, and it's not just this isn't just US capital, right? So foreign holding of US financial assets is the highest that it's been since in my lifetime. You can go all the way back to the 40s. It was never this high. It's up around 60%. So you have the US stock market today is now on a market cap basis, greater than all of Europe, China, Hong Kong, Japan, India, UK, France, Germany, Spain, Italy, Brazil, Mexico, and South Africa combined. Okay. On top of that, within the S&P 500, NVIDIA represents over 8% of the index. This is some of the most extreme concentration we've ever had. That, to me, represents risk. And so I don't want to be anywhere near it. I'm not going to short it because I'm not a short seller. And shorting is probably a bad idea. But I look and I say, okay, what's not owned?